The Social Security Administration has just activated a massive, high-priority internal reconciliation protocol for 2026, and if you do not act within the next 48 hours to understand the Section 204 legal loophole I am about to reveal, your monthly benefits could be reduced to zero. I repeat, your entire check could be slashed to zero without a single day's notice, so you must watch this entire video from start to finish, because I am breaking down the exact step-by-step strategy to get your overpayment debt completely forgiven under the new 2026 Administrative Waiver Rules. Welcome back to Macro Signal, the only authoritative source where we prioritize your financial survival above all government bureaucracy. And today, we are tackling the terrifying, life-altering reality of SSA debt recovery, which is why my first major call to action is for you to hit that subscribe button right now. Click that bell icon and turn on all notifications, because missing even one of our emergency updates could cost you thousands of dollars in lost benefits. So make sure you are officially part of our community before we dive into the line-by-line microscopic breakdown of Form SSA-632. Right now, in this very moment, the SSA is using advanced military-grade artificial intelligence to scan records from as far back as 2010, 2011, and 2012, and they are finding billions of dollars in what they call unintentional overpayments. But for you, the hard-working beneficiary, this means a cold, heartless letter in the mail demanding you pay back $20,000, $30,000, or even $50,000 immediately. However, if you stay with me until the very end of this video, I am going to show you how to prove you were without fault. I repeat, you must prove you were absolutely without fault using specific 2026 terminology that forces the SSA to pause all collection efforts while your case is under review. Let me give you a real-life documented example of a beneficiary named Mary from Ohio. Mary received a notice saying she owed $15,000 because of a clerical error made by an SSA worker 5 years ago, and because she didn't know about the Section 204 loophole, she started paying it back out of her meager check, which left her unable to pay for her heart medication. But once she applied the without fault clause and the against equity and good conscience doctrine, her entire debt was wiped clean, and I am going to show you exactly how to replicate Mary's success today, so do not go anywhere. You cannot afford to skip any part of this broadcast, not even a single second, because I am revealing the against equity and good conscience clause, which is a powerful legal shield, a literal wall of financial protection that most claims representatives will never, ever tell you about unless you bring it up yourself using the exact phrasing I am providing in the middle of this script. This is not just about a payment schedule, this is about your literal survival and your ability to keep a roof over your head. And the reason you must watch every single minute of this 2026 guide is that the SSA's new digital dashboard has a massive glitch that is automatically rejecting waiver requests that don't include the financial hardship affidavit, also known as the Statement of Expenses and Income, and I am going to explain the math of this affidavit in extreme, painful detail in the coming chapters of this video. We are seeing a massive, unprecedented surge in benefit seizures across the country, from the coast of Florida to the streets of California, and the only way to stop the government from taking your money is to be more informed, more prepared, and more strategic than the government employees handling your file. So please stay tuned as we analyze the net worth versus monthly expenses ratio, which is the critical formula, the golden equation that the SSA uses to decide who gets a waiver and who gets a collection notice. If you believe that seniors and disabled Americans are being unfairly targeted, harassed, and bullied by these debt recovery tactics, you must hit the like button right now to boost this video in the YouTube algorithm and share it with every person you know who relies on SSI or SSDI, because your one share could literally prevent someone from losing their home this month. And remember, you must be a subscriber to Macro Signal to access our private community polls where we track which states are being hit hardest by these 2026 audits. As we move into the technicalities of the administrative waiver, you need to know that the SSA has secretly increased the threshold for automatic forgiveness. but only if the overpayment occurred due to an agency error, and I will repeat that for emphasis. It must be a documented agency error, and I am going to show you how to find the digital footprint of that error in your own online Social Security portal. So do not close this video yet, because that proof is the difference between a debt-free life and a lifetime of monthly deductions. Consider the case of Robert, a retired veteran who was told he owed $8,000. By simply proving that the SSA failed to process his income report in 2023, which is a classic, undeniable agency error, he was able to stop the recovery process instantly, and I am going to give you the exact word-for-word template for the letter Robert used to win his case. Many of you have written to me about the request for reconsideration, and while that is important, it is often the wrong first step, a trap that delays your justice, and if you follow my instructions in the next few minutes, you will learn why filing the Waiver of Overpayment Recovery, specifically Form SSA-632, first is a much more effective, much faster way to keep your checks coming in full while the bureaucracy moves at its slow, painful pace. I am also going to reveal the 60-day grace period trick, which is a little-known regulatory timing strategy that can buy you months of extra time to gather your evidence. And this information is so sensitive, so powerful, that I have to hide it deep within this discussion to ensure only my dedicated, loyal viewers like you have access to it. So keep watching as we go through the complex math of the 2026 COLA adjustment and how it might actually be working against your waiver request if you don't calculate your disposable income correctly. Disposable income is the money you have left after paying for food, rent, and medicine, and the SSA wants that number to look as high as possible so they can justify taking your money, but I will show you how to legally, ethically, and accurately report your extraordinary expenses to bring that number down to zero. You have spent your entire life, 40 or 50 years, paying into this system. You have worked in the factories, the offices, the hospitals, and the fields, and you have a legal, constitutional right to every dollar you were promised. So do not let a clerical error by a 22-year-old government worker ruin your retirement. And stay with me until the very last second of this video, because I am going to give you the direct private extension number for the Regional Waiver Oversight Committee, the highest level of appeal you can reach before you have to hire a lawyer and go to federal court. If you haven't already, subscribe to Macro Signal and leave a comment below with the word PROTECT. If you want me to keep making these deep dive videos into SSA policy, and tell me exactly how much the SSA says you owe, so our team of researchers can look for patterns across different zip codes and provide even more specific advice in our next upload. We are now entering the most crucial phase of the script, where we discuss the Section 504 accessibility hardship and how it applies to those with chronic illnesses or mental health challenges. Because the SSA is legally required, I repeat, they are legally mandated under the Rehabilitation Act and Section 504 to give you extra leniency, extra mercy, if you can prove your condition made it difficult to report income changes on time. But again, you will only know how to frame this argument if you have watched the first half of this video and continue through the second half. I cannot stress the importance of the good faith effort documentation enough, because without it, your waiver is just a piece of paper that will end up in a trash can, but with the Macro Signal documentation pack, which I am describing right now, you can build a wall of evidence that is virtually impossible for the SSA to penetrate. Let's look at another example. Sarah from Texas had her benefits cut by 50% because the SSA claimed she had too many assets, specifically a small piece of inherited land. But Sarah used the inaccessible asset rule to prove that the property could not be sold for its supposed value, and her benefits were restored with full back pay. And you need to know how the inaccessible asset rule has changed for 2026. The reason I am asking you to stay until the very end is that I have a special bonus tip regarding bank account syncing and how to stop the SSA from automatically pulling funds from your direct deposit accounts, which is a new, aggressive power they are testing in certain jurisdictions in 2026, a power known as electronic debt recovery or EDR. This video is designed to be your ultimate survival guide, your manual for financial warfare against the bureaucracy. So please do not skip the part about notices of proposed action, because that is the last warning you get before the money stops. And I am going to show you the stop work order language that you can send to your local field office to halt all recovery immediately. If you are still watching, it means you are serious, you are dedicated, and you are ready to fight for your financial health. And I commend you for that, because most people will just give up, they will get depressed, and they will let the government take their money. But you are part of the macro signal family, and we do not give up, we do not surrender. So let's move into the final, most complex analysis of the total asset liquidity test and how you can legally move or protect assets so they don't count against your waiver eligibility. Liquidity refers to how quickly you can turn an asset, like a car or a ring, into cash, and the SSA's 2026 guidelines on liquidity are stricter than ever before, but there are legal exemptions for burial funds, tools of the trade, and even certain types of life insurance policies that can save your waiver from being denied. We must also discuss the deemed without fault provision for those over the age of 72, which is a specific age-based loophole that can bypass a lot of the paperwork if you know which box to check on the form. Furthermore, I will explain the equity and good conscience examples involving relinquishment of a valuable right, which is a legal term meaning you gave up something important because you relied on the SSA's incorrect payments, such as signing a lease or giving up a part-time job. This is a very technical area of the law, and I will be repeating the key phrases so you can write them down accurately. By the time this video ends, you will be an expert on SSA debt recovery. You will be a master of Form SSA-632. You will understand the nuances of Section 204 and Section 504. And most importantly, you will have the peace of mind that comes with knowing exactly how to fight back and win against the system. Do not let the fear of a government letter keep you up at night anymore. Information is power, and today, Macro Signal is giving you all the power you need to protect your family and your future. So keep your eyes glued to the screen and your ears open as we conclude this massive 2026 Social Security emergency update together, ensuring that no beneficiary is left behind in this new era of digital audits and aggressive debt collection.